Hey, what's up, everybody? Welcome back to another one of my videos. I started out making these live screen shares for my trucking company and just showing my QuickBooks, and I haven't done it in a really long time, so that's what I'm going to do. Like I said, I haven't done these in a long time, so I'm not sure how it's going to go, but I'm just going to walk you through my QuickBooks, and I'm going to show you some tips and tricks, show you some things that I do for my bookkeeping in my trucking company. So if you are a new owner-operator, and you don't have QuickBooks yet, definitely recommend getting QuickBooks. If you are an experienced owner-operator, and you've had a trucking company for a long time, maybe you're behind on your books, now is a good time to catch up. So I'm just going to start from the beginning, what I would do on a daily basis, weekly basis. So if you have a trucking company and you have QuickBooks, hopefully you can take some information from this and improve your bookkeeping. So we're just going to jump right into it. So right in the beginning, I don't know if you can see my mouse here, but I don't even use, on the left-hand side here, I don't use like the overview or the books review or the dashboard. I just go straight to banking right here on the left-hand side. And before I get too much further, so there are two different views. You can do the business view or the accountant view. And so if you click on your gear icon in the top right-hand corner, you're probably going to see that you are currently in the business view. So I would switch to the accountant view if you want to follow along exactly with what I'm doing right now. And also, honestly, like I just prefer the accountant view. Maybe I'm biased because that's what I've been using this whole time, but I feel like the accountant view is a little bit easier to understand. So gear icon at the top right-hand corner, click the accountant view. Okay, so like I said, I don't mess around with the overview, the books review, or the dashboard. I just go straight to my bank feed. And this is like my actual QuickBooks. This is my trucking company, Route 20 Trucking Company. I like to be fully transparent with everybody. So here, literally my books. So I'm showing you guys exactly what I do and what I have going on. So first and foremost, if you don't already, I definitely recommend get your checking accounts and your credit cards connected to the bank feed. It's super easy. All you do is go to this banking tab right here and you click on link account right there in the top right hand corner. And once you click that, it'll take you to a screen where you choose, Chase or American Express or whatever bank you might have, Wells Fargo, whatever bank you have, you literally just enter in your username and your password for your online checking account or online credit card. And then it pulls in all of the transactions automatically straight from your checking account, straight from your credit card. You should not be doing very much manual data entry when it comes to your bookkeeping. You really can automate almost everything. So first and foremost, link your accounts if you haven't already, and then it'll show up kind of like this. This is my checking account. You might have, I have multiple credit cards. I've got one with Capital One, one with American Express, one with Chase, and then I have here my EFS card. So a lot of my transactions flow through my EFS card, like my fuel and my factoring invoices. So I manually import all of my transactions straight from EFS because you're not able to connect your EFS card. But what you can do is right here where you link your account. You could also do what's called upload from file. This is very helpful whenever you're manually importing transactions. In order to upload from your file, all you need to have is an Excel file, and you need to have three things: the date, the description, and the amount of each transaction. So I take, for example, my fuel card, all of my fuel transactions, I just have the date, a brief description like fuel, and then the amount, how much you spent. And then you can save that on your computer, and then you can import that straight into QuickBooks. And all of those transactions are then imported into your bank feed. Super helpful feature. Okay, so this is the bank feed, and this is where you're going to do the majority of your bookkeeping. So you can see here I have EasyPass. So what I would do is simply categorize these transactions. I only have one because I keep up with my bookkeeping, but if you haven't done it in a couple weeks or a couple months, chances are you're probably going to have a couple hundred transactions right here. But for me, I just have this one. It's from August 2nd. So the category would be, for me, tolls, but you can literally make these categories pretty much whatever you want as long as they make sense to you and your business. So, it can be tolls. And then for the class, so this is super important. I had multiple trucks, so I wanted to track different classes specifically for my trucks. So I have here truck 1 and truck 2. And this is really important because you have different costs and different income associated with different vehicles. So if you're a big company, you've got 5 or 10 trucks, you're probably not doing this. But if you're just getting started out like I was, I wanted to know specifically truck one versus truck two, which one was profitable and which one was making more or less money. So every expense I would allocate specifically to each truck. So whenever my insurance came out, I would split that between truck one and truck two. My ELD, obviously my revenue, all my fuel, all my repairs and maintenance, job supplies, I would split all of that. If it was relevant for truck one, I would do truck one. If it was relevant for truck two, I would choose the class truck two. And then you see there I have general overhead. That's for like everything else. Maybe your QuickBooks subscription, maybe your DAT load board subscription. That can just be categorized or classified under general overhead because it doesn't correlate specifically to one truck or another truck. So category, toll road, classification, truck two. I actually sold, truck one was my box truck. I sold truck one, my box truck, a couple months ago. So I'm no longer using truck one, but I still classify everything for truck two. So tolls, truck two. And then for this memo right here, you can be as detailed as you want. You can put as much or as little information as you want right there. So for pretty much everything but tolls, I do add details. Like if I go to the scale, if this were a scale transaction, I would do 0802 scale, just something super simple like that. Or I would maybe do August PM for like my August preventative maintenance that I got done. And then lastly, before you add this transaction, I try to add an attachment to almost all of my transactions. So any receipt that I have for any transaction, I try to upload it into QuickBooks. That way I have some detailed record of what exactly went into that transaction. The Easy Pass transaction is probably a bad example because I don't really get like receipts for these Easy Pass transactions, but for everything else, like scales, showers, parking, repairs and maintenance, job supplies, I always try to add a receipt to all of my transactions. And then that's it. So you click add, and then this transaction gets added to your books. So this will show up on your profit and loss statement as a $500 expense. And that's literally all you need to do. Like that is how easy it can be to do your bookkeeping as long as you keep up with it. I feel like so many people wait months and months and years. They get so far behind and they're so stressed out. So as long as you just keep up with your bookkeeping on a daily or weekly basis, it's really not that difficult. So the last transaction I have here is this credit card payment. So pretty easy to categorize your credit card payments. What you want to do, you can do three different things. You can categorize it, you can record it as a transfer, or you can record it as a credit card payment. It really doesn't matter. It's all pretty much the same thing. So what I'm going to do is I'm going to record it as a transfer because what you're doing is you're transferring money from your checking account to your credit card account. So what I see a lot of people incorrectly do is they'll categorize money that they're spending to pay off their credit card. They'll like categorize that as job supplies or repairs and maintenance. That's not what you want to do. Money you transfer from your checking account to your credit card is not an expense in and of itself. It's just a transfer from one account to another account. So we have here $72 transferring from my checking account. So all you do is just type in your checking account, and then money is transferred from your checking account to your credit card account. And that's all you need to do. It's that simple. And once you have all of your transactions categorized, the most important thing you can do that's often overlooked is reconcile your accounts. So this is the bank feed right here. If you go all the way down to the bottom here, you'll click on reconcile. And this is a step that's often skipped, but it's super important. All you need to do is take your monthly statement at the end of the month and make sure penny for penny your accounts match up. So you can see here, I took my credit card statement. It came out on July 22nd. And so you're going to take your ending balance. So my ending balance for my credit card, I already did it, so I won't be able to do it again right now. But you can see here my ending balance was $3,318.64. So you type in that, you type in the date of your statement, closing date, and then you just click start reconciling. And then the screen pops up and QuickBooks kind of walks you through how to reconcile your accounts. But really, I'm not going to show you how to reconcile your account. The big takeaway here is that you should be reconciling your account. So that's all I'm going to say on that. Just go to accounting down here in the bottom left-hand corner, click on reconcile, and make sure all of your accounts are reconciled. You can do it for all your credit cards, all your checking accounts, savings accounts, and even your loan accounts. So I will take you over to one of my loan accounts right now. And the really important thing that you do is, let's see, we'll go to truck 2 loan. So this is my tractor. And it's really important that you split your interest and your principal. So you can see here, I got this loan in January, and it was for $45,000. And I've been categorizing every transaction since then. And I'll show you here, this is my transfer from my checking account to my loan account. So what all you need to do is you need to do two things. You need to split your interest and your principal. So here, the total transaction was $278 that came out of my checking account, but only 123 of that actually went to the loan. So it's going to look like $278 is transferred to your loan account, but keep in mind you need to split the interest and the principal. So only 123 actually went to the loan, and then 155 went towards interest. So anytime you're paying off a loan, it's always really important to make sure you split your interest and principal, and you can actually do that at the end of the year if you want to do just all 12 months of interest all at once. You don't technically have to keep up with it on a monthly basis, but I like to, because I like to look at my profit and loss, and I like to see on a monthly basis how profitable I was. Okay, now the other thing that we can do is go to our reports. So I pretty much showed you guys how to categorize your transactions. I showed you guys how to reconcile your accounts. The other thing I will show you real quick is depreciation. I talk about depreciation all the time, but I kind of talk about it almost like hypothetically or theoretically. So now I'm going to show you what it actually looks like on my books. So here is my depreciation, and like I said, I only have one truck right now. So we can look at the July. So I do it on the first of every single month, and I take depreciation for truck 2. So you can see here, $1,054.72 on a monthly basis. And the way I calculated that was I took the purchase price of my truck and I divided that by 36 for tractors, and you divide that by 60 for box trucks, because box trucks last 5 years and tractors last 3 years, 36 months, and trailers last 5 years. So it's really simple, especially if you only have one truck. It's super simple to capture your depreciation. This is something else that you can do on an annual basis at the end of the year when you're closing your books. But like I said, I like to track my profit and loss as accurately as possible. So I do it on a monthly basis. But here you debit your depreciation. So this is a non-cash transaction, so it is a little bit more complicated. That's why you have to do a journal entry for depreciation. But you just debit depreciation, and then this is where it gets a little confusing, and you don't have to completely understand accounting. You just need to know what to do. You just credit accumulated depreciation. Accumulated depreciation is just an asset account that's on the opposite side as the expense account of depreciation. But you don't need to worry about all the ins and outs of the accounting. You just need to understand that you debit depreciation and you credit accumulated depreciation for the exact same amount. And that is how, on a monthly basis or on an annual basis, you capture your depreciation. If you don't want to worry about this and do your bookkeeping on a monthly basis for depreciation, you can just wait until you do your taxes, ask your accountant, hey, how much depreciation did I take last year for my taxes? And you can just do one journal entry, or you can even ask your accountant to do the one journal entry for you to capture depreciation at the end of the year. The other thing I'm going to show you is what to do when you sell a truck. First of all, I'll show you what to do when you buy a truck. So we can go, let's see, we'll go to truck. We'll see what it looks like when I bought my trailer, because I just bought a trailer a couple days ago. So buying my trailer, we'll see here. So I created an asset account. First of all, you're going to want to create a fixed asset account. So whenever you buy an asset, anything more than typically $2,500, you don't want to expense that in real time. You want to create an asset. So like if you spend $33,000 on the trailer, you're not just going to write that off right away. That's what I was talking about with depreciation. So you need to capture the expense as an asset. So on July 22nd here, I spent $33,511 on a trailer. So for the category here, I just created, we can see a fixed asset account. I created a trailer, and I literally just transferred money from my checking account and I paid the dealership where I bought the trailer. So it's as simple as that. $33,511. And then you can see here, remember what I was talking about, attaching receipts and transactions. I always recommend attach as much detail as you possibly can to these transactions. So I took my trailer bill of sale and I attached it down here. Now that's to categorize the asset. And then I will show you how I also capture the loan. See, these things, whenever it's done correctly, it looks super simple, and it really is simple, but it's just difficult because if you don't know what you're doing in the beginning, then it can be difficult to get to this point. But here's the loan account, the trailer loan that I created. So I received $25,970 from my bank. I received that money. So my checking account, you can see right there, I received the bank deposited that money into my account, and then I allocated it to the trailer loan. But most loans are set up this way, and you have to be careful because you can see there they threw on an additional $350 of bank charges. So they deposited this amount of money into my account, which is $25,000, but my loan is actually for $26,000. So there's an extra $350 that's not accounted for in the amount of money they deposited into my account. And so you need to capture that extra transaction with bank charges for an extra $350. And this kind of stuff honestly gets pretty complicated, and you really need to read the documents from your loan officer to make sure you capture all of these numbers correctly. But this is how you categorize the deposit of money into your checking account and how you create a loan. So once again, super simple, just like you would a fixed asset. This trailer loan is just called a long-term liability. So what we can do here, I'm going to show you two more things. So far I showed you how to categorize transactions in the bank feed, how to reconcile your accounts. I showed you some unique and special transactions like acquiring trucks, getting loans, and depreciation. I'm going to show you two more things. I'm going to show you your reports. So on the left-hand side here, there's two really important reports that you need to be looking at on a regular basis. First of all is your balance sheet. And most people don't look at their balance sheet because they don't really care about their balance sheet, but I promise you it's super, super important. So for your balance sheet, you have your assets, your liabilities, and your equity. Up top here, we have our assets. And assets for you, if you have a trucking company, are probably going to be your checking account and your trucks and your trailers. You're probably not going to have too many other assets other than that. So for me, I have my checking account. I have my fuel card. So at this moment, this is as of July 31st, I had $12,000 in my checking account, $2,000 loaded onto my fuel card. And then the only other asset I have is my trailer and my truck. So $33,000 for my trailer, that was the purchase value of the trailer, and then $63,000 was the purchase price of the truck. And then remember what I was talking about, the flip side of depreciation is accumulated depreciation. If we're going to get technical, it's called a contra asset. It's like an opposite asset. So it shows up on your balance sheet as negative. So far, I've taken $5,000 of depreciation. So in order to show that on my balance sheet, there's a negative asset because basically the value of my assets is decreasing as I take depreciation. So we have negative $5,000 of accumulated depreciation as an asset. So all in all, $106,000 worth of assets, which is probably pretty typical. If you have a trucking company and if you bought a truck for $80,000 or $90,000 and you got a few $1,000s in your checking account, you're probably going to have close to $100,000 of assets on your balance sheet. And then we can go to our liabilities. So your assets are always going to equal your liabilities plus your equity. And equity for us is typically four different things. Either owner's investment, so if you take your personal money and put it into your business, or owner's pay, if you're taking money out of your business and paying yourself, or retained earnings from the previous year. Like let's say you made $20,000 last year, you're going to have $20,000 of retained earnings from last year. And then finally, you're going to have net income show up as equity. Right here, equity, net income, and that's how much money you've made this year. But let's talk about, we can finish talking about equity real quick. So owner's investment, I have invested $63,000 into my trucking company. I lost $17,000 last year, and so far this year I've lost $22,000. So I talk about it all the time. Obviously, my trucking company not doing super hot, but if you follow along, you already know that I don't drive my truck. So I'm trying to build a business where I invest in people and assets and grow a business. So far, not working out too hot. Primarily, a lot of that was due to the box truck fiasco. Like that just did not work out for me. But I don't want to get into that. I mean, all you need to know is I've lost a lot of money. I put a lot of money into it, lost a lot of money so far. But the last thing I want to talk about for your balance sheet is your liabilities. So your credit cards are liabilities, your lines of credit are liabilities, and your loans, your notes payable are also liabilities. So you can see here I have all three credit cards right there. This is just the outstanding balance of my credit card as of July 31st. And then this is my trailer loan, $26,000. And this is my truck loan, $44,000. So that's how much money I owe outstanding on all of my liabilities. Last thing we're going to talk about is the profit and loss statement. So two things here, three things. You can just run a regular profit and loss. You can do a profit and loss by month, which I absolutely love. This report that I've been using, profit and loss by month, is super cool because you can do this year to last month, and you can really look at every single month. Like I just think this is so cool. I mean, I'm just probably being a nerd with my accounting and my bookkeeping, but I think it's so cool to be able to look at your income on a monthly basis. You can really compare and see. So this really makes sense. So January didn't have a tractor, just had a box truck. February and March, I had a box truck and a tractor. That's why my revenue was so high. I almost made $50,000 of revenue in March. And then I sold and got rid of my box truck. So my revenue started going back down, 30,000, 23,000, 22, and then 23,000 in July. And then this is where you're going to see all of your categories. So, I mean, you can see here, you can take a screenshot of the screen if you want. These are all the categories I use for my trucking company. I'm not going to go through every single one line by line, detail by detail. Probably the biggest ones I have are insurance, cost of labor, which is how much I pay my driver, my dispatch fees, I pay my dispatcher 6%, and then repairs and maintenance is probably another pretty big expense that I have. And then my staffing agency, if you've been following me for a while, you already know I use a staffing agency to find my driver. And then this gain and loss on sale of an asset. I sold my box truck and I lost $8,000 when I sold my box truck. So this is just kind of an unusual expense. If you haven't sold any of your trucks or trailers, you're not going to have this. But this is my profit and loss by month. Like I said, it's super cool because you can look January, February, you can compare and contrast every single month. But you can see here, I mean, I already said it on my balance sheet, but my net income so far, negative 20,000, and primarily most of that is due to my box truck, which I will show you in a second. So this is the last thing I'm going to show you. That was profit and loss by month. Now, my favorite report, the report that I really care about, is my profit and loss by class. Now, this has been an awesome report. Like I said before, I allocate all of my transactions to particular classes. So I had a box truck, and now I have a tractor trailer. So we can do last month, and we can look at how we did last month. So for truck one, majority of my loss came from selling the truck. Tractor trailer, negative $3,000. And I'm not going to deep dive too much into my profit and loss here, but negative $3,000 for truck two, and then general overhead, $203. I'm not entirely sure what that was. Maybe it was my website. Yes, I spent $200 a year on my website. So that's a good example of general overhead. That was my website. Okay, last thing we will do here, we will do this entire year. Profit and loss by class. Let's pull it up here. And we can see how because I really only care about the tractor. I'm done with the box truck. So if we take out the box truck and do this year to last month, and we can look at it and see how much money the tractor trailer has made, or I think probably lost. Let's see. Tractor trailer has lost $8,000. And that's due to a lot of things. Primarily, my clutch had to be replaced in February. That was $6,000. And also May and June, we all got crushed by crazy high fuel cost. So this is my profit and loss by class for January through July. You can see I lost $12,000 with the box truck, done with that. And I've lost $8,000 with the tractor trailer. Hopefully, though, Hopefully, I will have a better report to show you guys at the end of August because fuel prices are going down and brokers are starting to pay us a little bit more.